We'll deal with final accounts in this session. Final accounts. Cash business transaction. அதிலிருந்து நம்ம என்ன பண்ணுவோம்? We prepare the in accounting cycle. We'll start with cash business transaction, and then we prepare the journal entry with the help of accounting rule. With the help of accounting rule. Okay, we have debit credit rules for real account, personal account, nominal account. Applying that, we prepare the journal entry, we pass the journal entry, and then the grouping of accounts will be named as ledger posting. So first one is passing the journal entry. We use the term passing or journalizing. In this case, ledger preparation, posting. After the ledger preparation, we summarize that, which is called trial balance. The balances of ledger presented as a statement is called trial balance. Trial balance, is that okay? From the trial balance, we prepare the final accounts. Final accounts of three formats or three blocks, named as trading account, P&L account, and then balance sheet. Okay, whatever the balance you will get in trading account is transferable to the P&L account as GP. Whatever the balance you get from preparing the P&L account named as net profit, transferable to the balance sheet. This balance sheet is the opening journal entry for the next year. Okay, opening journal entry. After that, we add up some other transactions also in journal entry. That's how the process will go on. Each and every year later, this trading account and P&L accounts are going to be simply eliminated, because we always start with the assets and liabilities applicable in this year. Assets and liabilities applicable in this year. And we of course have another route. That route is nothing but starting from CBT to directly preparing the ledger, which is called subsidiary books and journal proper. Practical system. This is called practical system, where we prepare subsidiary books and pass the journal entries, like which is called journal proper. Those things which could not be recorded in subsidiary books. This is called accounting cycle. Let me now brief the simple structure of final accounts here. Final accounts of three components, right? Three components or three parts. What are they? Let me explain those things here. So, trading and P&L account, for the first two blocks, this one and this one, we commonly name that as trading and profit loss account, right? Trading and profit and loss account. Okay. While naming may be common, but we prepare the trading account separately as well as profit and loss account separately. Okay, the first block in the trading and P&L account represents the trading account. Second block represents the profit and loss account. And then we will prepare the balance sheet. Balance sheet as on that date. Balance sheet. Balance sheet. Okay. In trading account, left hand side is debit or expense side. Right hand side is the credit or income side. When it comes for the balance sheet, your left hand side will be named as capital and liabilities, especially we call that as being liabilities. And in the case of right hand side, it will be named as assets. Okay, from the trial balance, I am going to post that to trading and P&L account. What are the items will be appearing in the trial balance? Let's see here. In trial balance, assume that, so these are the items are there. Okay, I'll assume these are the items available in trial balance, right? Now in trial balance, okay, debit side and credit side, is that okay? In the debit side there will be expenses related to the trading account and expenses related to the profit and loss account, as well as income related to the trading account, income related to the profit and loss account, expense, income related to profit and loss account. Clear? Apart from that, in the debit side we have the assets also, and in the credit side we have liabilities and capital, so these are the items are appearing in general. Now asset may not be single asset. It consists of various assets like plant and building, plant and machinery, whatever it may be. You have to identify that and post it. Similarly, liabilities may be sundry creditors, debentures, long-term debt, and all the things will be available in liabilities. And capital is a single amount, owner's fund. Right. Here, trading and P&L account. Balance sheet, okay, is not an account. This is not an account. Clear? This is not an account. It's only a summary. What the company owes or owns will come in the asset side and owes comes in the liability side. Right. Trading and P&L account, debit and credit. So trading and P&L account, debit and credit we have. Now, why I tell you is very important. Okay, the expenses transferable to one account to another account. From expenses account to trading account, or from expenses account to P&L account. If you are transferring from one account to another account, we can transfer through a journal entry. The journal entry is named as transfer entry. The name of the entry being transfer entry. I am transferring this expenses account from the trial balance to trading account. How do I pass a transfer entry here? You just see that. I am going to pass a transfer entry here. Transfer entry. So for transferring expenses related to trading or related to the trading account to trading account. Okay. How do I pass? Expenses by default debit. Right. So always remember, in case of transfer entry, any account remains in the debit means it should be transferred to the another account during the transferring. While transferring, the debit gets cancelled by crediting, and then the new account where it is transferred should be debited. That's the logic. Here, expenses is a debit balance. It should be now transferred. Expenses should be transferred. As it is being the debit, it should be transferred means it should be credited. And where it should go? It should go to the trading account. So there it should be debited. Trading account should be debited. Right. So listen here. This is debit balance. To cancel the debit balance, I simply credit it to expenses related to the expenses to be posted in the trading account. And we have to debit what? Trading account. Is that clear? Hope you could understand. For your better understanding, I'll just give the assumed numbers also here. Assumed number. Trading account expenses being 1000, profit and loss 500, income 2000 rupees, profit and loss income 200 rupees, liabilities 1800 rupees, and capital 6000 rupees. So the overall total being 10,000 rupees. Am I right? Here also we have 10,000 rupees. And asset should be 8,500. So assume that this is the summary of trial balance. My first duty is to transfer the expenses related to the trading account from the trial balance to trading account. As the expenses are always debit, to transfer that debit item should be credited. So the expenses being the debit, it is credited. And it should go to the trading account. No, the account where it is transferred should be now debited here. So here the journal entry being 1,000 and 1,000. 1,000 and 1,000. Such a way we can pass the entry for this. And what about this entry? Expenses to P&L account. Expenses related to the P&L account will be transferable from the expenses to P&L account. Further, the journal entry being, okay, expenses of P&L account to P&L account. As expenses being debit, to transfer this debit should be what? We have to cancel it by crediting it. Okay, so two expenses, this value being 500, and it should be now debited to profit and loss account. Is that okay? Hope so you could understand. Similarly, the income, this one, okay, income related to the trading account is transferable to the trading account. Remember, income should always be credit balance, right? To cancel, it should be now debited. So this income, okay, I am going to debit it. So income related to the trading account is debited. Income related to the trading account debited to trading account. Is that okay? The value being 2,000 rupees. And this is 500. Okay. Then finally, income related to the P&L account also being transferred to P&L account. So income related to the profit and loss is transferable to the profit and loss account. So the entry being, as income is always credit balance. So here is also credit balance. So it should be now debited. So the income should be debited now to income related to the P&L account will be credited, the value being 200 rupees. And we have to debit that credit, no, so you have to cancel, sorry. This is credit balance. Credit balance means you have to cancel it by debiting it. So I am debiting that income related to the P&L account. And to what? Crediting the P&L account, the value being 200. Remember, by posting this expenses trading, that account is eliminated. Expenses P&L account got eliminated. Income trading got eliminated. Income P&L account got eliminated. And what are the leftover journal entries we have, or accounts we have? So this one right here, I'll just put the tick mark here. Expenses related to trading and expenses related to the P&L account. So the leftover thing being this trading account, am I right? That trading account will go to the trading account, which side? Two expenses. Isn't it? The value being 1,000. And here in the second entry, the leftover item is P&L account. In P&L account, two expenses. The value being 500. And here, trading account in the credit side. No, then by income in trading account by income. The value being 2,000 rupees. And here in P&L account by income related to the P&L account, the value being 200. Now we have completed this. See, in trial balance we have posted all these items, and these items are still left over, right? The leftover will be posted the same side. Asset I'm going to write it down as a list of assets available. It is not transferring. It's not transferring. It's only writing down the things available in the assets in the asset side. So the assets here being, so we don't pass the transfer entry here because it's not an account to transfer. So transfer entry means it should be transferred from one account to the another account. It's an asset only. You just write it down all the assets as a statement. So in the asset side, I'm going to write it down all the assets as a statement. So here the asset being 8,500. Similarly, in the liability side, usually we'll start with capital. The capital here being 6,000 and liabilities 1,800. It's only a statement. We don't pass the journal entry here. Writing down the statement. As already told you, by preparing the final accounts, we have the trial balance as a base. From the trial balance, we prepare the final accounts. After preparing the final accounts, there we have three components: trading and P&L account and balance sheet. Tally one after one. If you tally the trading account, whatever the balance will get, which is named as gross profit. This is called gross profit. Is that okay? That gross profit is now transferable to where? P&L account. Okay. For this, of course, we need to pass the transfer entry because trading account is a separate. Second half is a P&L account. Now the GP is transferred from which account to which account? From trading account to P&L account. Whenever we are transferring from one account to another account, we need to pass the entry. Come on, pass the entry for transferring the GP. GP of trading account transferred to P&L account, right? So the entry being P&L account debit. P&L account to. So what's the entry? P&L account debited or credited? Debit. Yes, GP is left with what? Credit balance. Isn't it? Profit is a credit balance. As it is being the credit balance, that should be now transferred, means it should be debited. So GP account is debited. GP account debited to P&L account. So by passing this entry, we can transfer the GP of trading account to profit and loss account. Is that okay? Similarly, finally, I am going to tally the P&L account. 1,200. We get 700 rupees as the balancing figure named as net profit. Okay, what we do with the net profit? Again, it's a statement. It's only balance. We are not going to transfer that. It's going to be posted only in the either asset side or liability side. Is the company responsible for paying this 1,000 rupees or 700 rupees to the owner or not? Yes, whatever the leftover amount is there, company is liable to pay it to the owner. This is for the owner's risk-taking ability offered one. So the net profit is nothing but the amount of benefits given to the owner for the risk taken by him. So I am going to credit here 700 rupees net profit. By default, this will be addable with the capital. It should be addable because who is the reason for the entire business and also responsible for any results. If it is a negative, he is the bearer, and in the case of positive, he will be also taking the advantage over that. So if you tally this, the total being 8,500. From this, we are sure the balance sheet gets tallied. In the next year, now what we do? This balance sheet is the starting point. This balance sheet is the starting point. I told you, will be starting point every year. Every year, what we do? We simply cancel all these things because so much of things will have any importance the next year because all these things are expired. Okay, rent paid, you enjoyed the possession. Salary paid, you enjoyed the service of the employee, and you purchase and sold the goods also. No more the goods now available for subsequent year's sale. So all these things are expired. The expired thing will have no role in the future. Skip over all these things. So finally, we have to pass the journal entry for the balance sheet in the next year. By passing the entry, we are going to simply debit all the assets and credit the liabilities and capital. That's how we can pass the entry. Let me pass the entry here. Asset account debit. Asset by default, asset is a debit balance. No, so I'm going to write that in the debit side only. And liabilities, two liabilities. So assets being 8,500, liabilities being 1,800. and balance being the owner's fund capital. How much is the owner's fund? 6,700. The profit is also added with the owner's fund. Sir, can I pass the entry for adding the net profit with the capital account? Of course, you can add that also by passing the entry. Net profit being the credit balance, right? So, to transfer the net profit to owner's fund, the net profit account is debited and the owner's fund capital account can be credited. That way also you can pass. Let me pass that here for your better understanding. Okay, profit and loss account debit. Profit and loss account debit to owner's capital. The value being 700. By passing this entry, what happens? We have clubbed the capital to the owner's fund. So I have now explained how the trial balance is going to be transferred or recorded as a statement in the balance sheet. Transferred to the trading and P&L account or recorded as a statement in the balance sheet. Balance sheet is a statement, it's not an account. And trading and P&L account, both are accounts. Two accounts are there, but commonly named in the overall itself trading and P&L account. But the first block of the trading account and P&L account, trading and P&L account represents the trading account. Second half will be the P&L account. In trial balance, it's your duty to find out whether the expenses related to the trading or P&L account. Similarly, income related to the trading or P&L account. Leaving that, any assets and any liabilities are there, no, that should also be identified. Okay, which is nothing but what is that? A company owing to outsiders or owning for settlement of these liabilities by the company will be named as assets and liabilities and capital. That will be not transferred, written as it is in the balance sheet, right? So transfer entry also there. Okay, and then just writing down is a statement is also there. Transfer entry of the four varieties. Okay, one is related to the trading expenses, another one is related to the P&L expenses, another one is related to the trading income, another one is for trading P&L account. Trading P&L means expenses for the P&L account. Apart from that, GP is also transferred to the P&L account and P&L account is transferred to the capital account. That entry should also be understandable. And finally, the closing balance sheet becomes the opening balance sheet in the next period. Opening journal entry for the next period. For that, this is named as opening journal entry. Opening journal entry. The method of passing the opening journal entry is very simple. All the assets debited, all the liabilities and the owner's fund is credited. Right. So we have seen transfer entries. This is transfer entry. This is opening entry. This is opening entry. Is that okay? The transfer entry sometimes will be named as closing entries also because we are closing the accounts. Hereafter, we don't have any expenses to be carried over the subsequent period. Subsequent period, we incur additional new expenses only going to be recorded. Right? Make a note of it. Then I will explain what are the things will come in the trading account. What are the account items will come in the P&L account. Right? So we will be grouping that. Finish up copying this. As well as in P&L account. Imagine that in a furniture mart, okay, they have so much of operations. Furniture mart, okay, they purchase the raw materials or materials, whatever it may be. Okay, semi-finished items or completely raw material or whatever it may be, wood, steel. They use this for converting into the furniture. Sometimes finished form of furniture itself. But it cannot be saleable as it is. It should undergo some other processes also. In the furniture mart, wood will not be available for sale, right? That wood will be converted into table or bureau or shelf, whatever it may be, only then it can be saleable. That will be done in the workshop. So, they purchase the furniture. We assume that this is the material purchases are simply purchases. Those material will not come to the workshop or the first level in the godown. Automatically, it should be transferable with the help of any cart, okay, bullock cart or whatever it may be, or some vehicles. Any amount payable for that will be coming under carriage inward. Carriage inward. And any costs you incur related to this operation, like wages, small expenses you incur related to getting the goods to your own place, like wages, as well as sometimes inside we have the cartage. Cartage. Okay, cartage is nothing but any fee payable for the cart, bullock cart or whatever it may be, tricycle, whatever it may be. For that, any fee you pay will come under cartage, without which the asset, that the purchased item will not come to your place. Apart from that, we need to have the showroom. We need to have the showroom, isn't it? From the showroom only, everything is displayed and sold. Meanwhile, to administrate the entire thing, we need to have the office also. Office. This will be named as workshop. Another one is named as office. The last one is named as showroom. And to run the showroom also, we have some expenses like rent for the showroom, electricity bill for that, and salesman salary, isn't it? And the packing material and building material like stationery, etc. Okay. Apart from that, the goods will be delivered at the customer side. That will be named as carriage out. Carriage out. Is that okay? So all these things are going to be spent for the showroom. For the office, again we need to spend for stationery. Okay, office clerk salary. Okay, salary to them. Rent is there. Electricity bill is also there. N number of other things also possible. You can very easily guess whether the expenses is related to the workshop or office or showroom. In case of workshop, not only that, we have lots of rent, like rent for the workshop or factory buildings, expenses, repairs, and all these things will come under this. If I categorize that in this angle, the finally it is going to be sold. Sale. This first block, this block will come under trading account. Here, this will be trading account. From here to here, those items will come in the P&L account. Is that okay? You no need to mug up what are the items will come in trading and P&L account. You have to understand the logic. So those expenses related to the up to this part will be called as trading expenses. And those expenses related to these two parts will be called profit and loss expenses. Expenses debited to the profit and loss account. Is that okay? And by default, the sale will be a part of what? Trading accounts revenue item. It should be only in trading account. So mind that it's very simple. I have seen some books where there is a list of items debited in the P&L account as well as debited in the trading account, right? So if I study then, I usually get confused. What are the items will come there or here? Lots of confusions is there. But if you understand this logic, up to the time that the goods is ready for sale, you cannot purchase the goods in the half baked or half processed or work in progress state. If it is 100% completed, then guarantee you will purchase, right? So unless it is 100% completed, you will not purchase. Means for the completion of 100%, what are the expenses you incur now will come under trading account. After that, that will be sold through the showroom or some other processes like advertisement. All these things are P&L account related expenses. And to administrate the entire division, like the showroom or whatever it may be, building and all, will be administered by another team, administration office or administration team. They too do some expenses not related to the trading account. So in such a way, you just think of whenever the expenses comes, immediately your mind should get struck with what? Okay, is it an item for the workshop or item for the office or showroom? Then you can easily guess it. If it is an item for the showroom and office, can be debited directly to the P&L account. If the expenses is related to the operations until it gets finished, no, that will be debited to the trading account. Hope so you could understand the logic. Because I've seen sometimes I too get confused. Okay, there is a term called wages and salary and wages and alone salary and wages and wages and salary. Okay, wages Will it come in the trading account or P&L account? Wherever it may be, it will come. It will come in the trading account as well as in P&L account also. Right. On delivery of goods, somebody comes to our office and he orders a pack of our material. We said, okay. He immediately says, sir, kindly deliver to my home. Will it be possible to deliver without a labor? I need to have a laborer. I need to pay the cartage. I call for a laborer. Sir, do all the packing and bundling this and porter service also. It's a heavy, bulky. So I'll get the service of porter. Are you paying the salary to the porter or wages to the porter? Porter. Porter is the person who is carrying. Wages only, no? A small amount is called wages. It's not coming under salary. Wages payable to the porter or any rickshaw wala, or it may be, that will be debited to the P&L account. So that confusion should not be there. So I won't usually say that this wages will come in the trading account, this wages will come in the P&L. No, you will now understand yourself. Wages related to the production up to the point will be debited to the trading account. Any expenses incurred later, yeah, of course we have the rent for factory, we have the rent for admin office, we have the rent for showroom. Okay, where to debit the rent? By default, rent should be debited to P&L account. But if it is related to the factory, should be debited to the trading account only. Anyhow, we are confining our study with what? Trader. We are confining our study with trader. Final accounts for trader. Final accounts for trader means definitely what we don't have, raw material form will not be there. The difference between the trader and manufacturer is what? The trader simply buys, adds profit and sells. Manufacturer, he buys the material and converts that into the finished goods and sells. I purchase a table from a wholesaler and sell it. Then I am a trader. I purchase the raw material. I convert that into the table and I am selling. Then who am I? I am a manufacturer. We are confining our first level of study where I am being the trader, buying and selling only. So definitely factory related expenses will not come here in the case of trading concern, buying and selling. In the case of manufacturing concern, buying, doing some manufacturing operation, convert it into finished goods and selling. After this lecture, we'll go for that one also. Now we'll confine with the trader only. So you can now easily guess what are the things will come and what are the things will not come. Once I had a doubt also. Heating and lighting. Where will it come? In trading account or P&L account? Heating and lighting. Heating and lighting. Where will it come? The heating and lighting. Why it is coming in trading account as per your statement? Heating and lighting. Heating and lighting should come in the P&L account. Right. Why do you think that heating and lighting will come in the trading account? You may be misguided. Understand that. We have copied Indian version book most of the times from the foreign version of book. In UK especially, even in Russia, the temperature level is so chill, -5, -10 also. Okay, in their office they will have what? Heater, not AC. Okay, we don't have the heater here. By default, we are living in heater. So summer, hottest summer only we have the weather like. Okay, then we have the AC. Air conditioned expenses. Come tell me now, where will it come in trading account or P&L account? You are very clear because it's our own language. Heating and lighting, we understand already heating is there, but we don't understand the chill. Right. If the climate is chill, then we need to have what? Heater. We need to have heater. So the heating and lighting expenses is meant for what? Heating and lighting of the office for the convenient working environment. Isn't it? So the heating and lighting should come in the P&L account. I suppose I sometimes think over why do I want to use the term heating and lighting in India? So we need to use what? Air conditioning expenses. There is no air conditioning expenses at all. I've seen most of the books, there is no air conditioning expenses. Okay, cooling expenses is not there. But predominantly we are in need of the cooling expenses only, right? Anyhow, by this way, if you understand, you can easily understand whether it comes in the trading or P&L account comfortably, right? Come on, make a note of it. below. From this question number 1, we have to prepare the final accounts. It is not just preparing the final accounts. Better you can pass the journal entry and then prepare the final accounts. Passing the journal entry is nothing but a transfer entry. You have to finish off transfer entry. Transfer entry is otherwise named as closing entries. Closing entries. Let me finalize the items where it will go. Purchases will go to the trading account, debit side. Trading expenses. Carriage inward, trading expenses. Administration, P&L account expenses. Selling expenses, P&L account expenses. Fixed asset, 12% investment asset. Okay, cancel the 12% here. I just eliminate this. Debtors asset, cash assets. Opening stock, where will it go? Trading expenses. Sales, trading income, capital, liabilities, loan liability, creditors liability. Is that okay? So we can pass the transfer entry only for what? These items we need to pass the transfer entry. Let me now pass the entry for the trading expenses as well as P&L expenses. The entry here being trading expenses transferable to trading account. For that the entry being debit, no, while transferring the debit should be converted to credit and the account where it is transferred will be debited. So debit trading account, so trading account should be debited. Trading account should be debited. To what? Purchases. Purchases. To carriage in. To opening stock. To opening stock. Purchases value being 5,000. Carriage in 1,000. Opening stock 1,000. So I have posted this one, this one, this one. These three over, right? The next entry is all about
7,000.
yeah, 7,000 rupees, the total. The next entry is all about trading income. I'll pass for this trading income. Okay. Transferring the trading income to trading account. All the credit item while transferring should get debited and the area or the account where you are transferring will be credited. Right. Now, sales should be debited. Sales should be debited. Sales account. To what? Sales account debited to trading account. Trading account. The value being 7,000. The value being 7,000. Next, now we will go for profit and loss expense, profit and loss account items. We have two expenses to be transferable to the P&L account. Profit and loss expenses transferable to P&L account. P&L account. Entry being the debit should be credited and you have to debit what? The account where it is transferred. The account here is P&L account. It is going to be transferable there. So P&L account debit. To admin expenses. Admin expenses. To selling expenses. To selling expenses. Admin expenses being 1,000, selling expenses being 1,000. Overall value being 2,000. Overall value being 2,000 rupees. We don't have anything to be transferable from profit and loss income to profit and loss account. So only 3 entries. Yeah, from the trial balance. So finally we have been given the closing stock also. For that we need to pass the entry. Closing stock. Closing stock. Closing stock is an asset. Asset should be debited always. So stock in trade account debit. Stock in trade account debit. And that will go to the trading account. To trading account. In the next illustration, next model, where the stock account is going to be totally handled in a different way, the next pattern. Let me now go with the basic model where the stock in trade is, closing stock in trade is transferred to the trading account, the value being 3000. So I have passed the entries here. Let's see here, sales. This is recorded from here. Admin expenses and selling expenses also recorded. And still we have some unticked account. That unticked account should be posted to the concerned new account. The new account being here trading and P&L account. So we open the trading and P&L account and this should be transferable there. Right. Now let's see here. Trading and P&L account. Trading and P&L account. Trading and P&L account. Trading and P&L account. And then balance sheet. And then balance sheet. Assets in the left hand side, sorry, right hand side, and liabilities in the left hand side. Debit and credit. Now, these accounts were already posted. Okay. Still unposted items are there. What are they? Fixed assets, investment, debtors, cash. All these things are assets. Simply write down in the asset side. That's all. It's not transfer entry. It's only recording. It will have the subsequent continuity in the next period also. So here the entry being fixed assets, value being 4000. Investments, value being 2000. Debtors, the value being 1000. Cash, the value being 1000. So we have now posted all the items in the debit side, available in the debit side of the trial balance. And in the credit side also we have these three: loan, creditors and capital. Loan, creditors and capital. Now, loan account, the value being 4000, and creditors account, the value being 1000 rupees. 1000 rupees. Is that okay? Capital, 5000 rupees. I will put that value in the inner column because we are supposed to adjust the net profit or loss. Wait. So with that we have recorded all these things. Closing stock also we have posted. If you are posting that into a journal entry, then it's already assumed to be posted only. Now the unticked item in this journal entry should be now posted. In trading account, two purchases. It's now posted here. 5000. Carriage in 1000 rupees. Opening stock 1000 rupees. And here trading account is the credit side, means in credit side buy sales. This value being 7000. And here in P&L account, two admin 1000 rupees. Two selling expenses 1000 rupees. And in closing stock there is an adjustment. So stock in trade, debit side. Stock in trade debit side means, what does it mean? It's an asset. Asset should be posted only in the asset side. Remember, it's an asset. Should be posted only in the asset side. Stock in trade. This value being 3000. And in trading account, it's in the credit side, no? So in trading account, in credit side, we have to now post that as closing stock. This value being 3000. Close the trading account to find out the GP. Here the GP being 3000, right? That GP should be transferable to the P&L account. And whatever the net profit you get should be transferable to the capital account. Okay, this is the net profit. I will add here 1000 rupees. It's just a transfer. Rather than this, we can pass a transfer entry also. For the GP, the transfer entry being, transferring from GP is transferred from GP's account to P&L account. So I have to debit the GP account because the credit balance to profit and loss account. The value being 3000. Or simply you can name this way, trading account to P&L account. Trading account to P&L account. Is that okay? Then the P&L account is transferable to the capital account. So P&L account debit to capital account. The value being 1000. From here to here, it will not go automatically. Who told you that this balance will be transferable to the credit side? It's not a raw way. There should be a step. That step is nothing but transfer entry from the GP to P&L account. That entry is trading account debit to P&L account. And net profit, what you get is also going to be transferable to the capital account. You just name this being capital account rather than net profit. P&L account debit to capital. That's how you'll understand. Now, finally, if I tally the balance sheet, it tallies with 11,000 rupees, I think so, right? 11,000 rupees. Make a note of it. Is it real or nominal? On purchases, this may be named as real account. Okay. On sale of those purchased item, this will be named as nominal account then. So, purchases could be real account as well as purchases could be sometimes nominal account also. While purchasing the means stocks, usually we call that as a real account. On sale, those things are going to be debited to the P&L account. To the extent of purchased items sold, no, is called nominal account. Right. Purchases being 5,000. Purchases being 5,000. What about this purchases? Named as real account. And how much you sold on that? We have opening stock, right? I'm going to add the opening stock with these purchases. If I add the opening stock with the purchases, you will have 6,000 rupees here. What is that 6? Goods available for sale. How much goods you are able to supply, sir? If somebody comes to our shop and inquires about that, already I have 1,000 rupees worth of stock in our office or in our godown. We purchased another 5,000, so almost 6,000 rupees worth of stocks available in our godown. How much stock you want? Right. So, this is called goods available for sale. And in the year end, we have 3,000 rupees worth of stock unsold in our godown. What does it mean? Minus closing stock. Minus closing stock. 3,000. The balance 3,000 rupees is nothing but sale. Sale of purchased item. Okay. Sale of, or this is named as cost of sales. Cost of sales. Otherwise, this is named as adjusted purchases. Adjusted purchases. That 3,000 cost of sales, otherwise named as adjusted purchase. To the extent of stock available, how much of stock sold, you just find out that stock is now expired. We don't have that stock. Then this will be always nominal account transferable to the trading account. Only this amount is transferable to the trading account. This will be transferable to trading account because trading account is a nominal account. It is very confirmed that any purchased item sold, that becomes nominal account. Expenses. Asset means whatever the things you possess or for whatever the things you pay, for that you have the benefits in the future. At least once or n number of times in the future. I have stock unsold in the year end, can be saleable in the next year. I can make a profit out of it. So I have a revenue in the future only once. I have a plant and machinery, or I have a land and building. As on 31st March year end, that land and building could have been let out for n number of years. I can generate the rent year after year. So from this, it is very simple to understand. Anything you possess, because of that possession, you may enjoy some benefit one time or multiple times in the future. Then it is called an asset. This purchases, I am not sure whether it's going to be sold in that same year or not. So I am not aware about whether the purchased item sold in that same year or not. I can consider the purchases either being real or nominal. There is no any harm in classifying in the both the way. Okay. But to the extent of purchase item sold in that year by the end of 31st March, we don't have that purchased account in our hand to be enjoyable in the future. If any spending don't have, or we don't have any benefit to the near future, will always be named as expenses. Expenses will be nominal account. Even plant and machinery, you think the plant and machinery being an asset will have a life for more than 5 to 6 years. But surprisingly, the asset we purchased got collapsed halfway through this because of mismanagement or misutilization. When we inquired with the seller says, "Sir, it's a misusage of yours, so we are not in the position to repair this or replace this." Now the amount we spent for purchasing the plant and machinery is totally waste. We don't have any benefits to be enjoyable in the near future. So the entire plant and machinery, though you thought the asset, though the plant and machinery is thought as an asset, no more asset debit to P&L account. Debit to P&L account. Is that okay? While debiting the plant and machinery to the P&L account, this is always named as nominal account only. Is that okay? Same logic is applicable here also. Purchases. Purchases is either real or nominal. And when you adjust the opening stock and closing stock with that ultimate purchases is always nominal account only. You should not have any confusion. Sir, is it nominal or real? No, this will always be nominal account only. The cost of sale. Cost of sales where we have not added the profit with that. Opening stock plus purchases minus closing stock will be called as cost of sales or adjusted purchases. That will always be nominal account. Nominal account. This could be equated with what? Rent account. Rent account. Okay, to have a better understanding, I am going to give this way. The purchases account is equated with the rent account. I paid 5,000 rupees rent. Opening stock is nothing but opening advance rent. I have paid rent in advance in the opening. Any rent paid in the opening or is an advance. What's that? Okay, rent in advance. Rent in advance is asset. Am I right? This rent in advance, we may have opening also as well as closing also. If we have rent in advance closing, what does it mean? This is asset and it will be subtracted from the rent account. And if I have the advance rent paid in the beginning, then what's this? Also be now added with the opening, means rental expenses. The opening rent in advance is added with the rental expenses. Closing rent in advance is subtracted. It means, assume that 1,000 rupees is the rent per month. 1,000 rupees is the rent per month. For your better understanding, we have paid rupees 14,000 rupees in that year. Okay, rent paid is how much? 14,000 rupees in the year 2020-21. In the year 2020 and 21, the rent paid is 14,000. Is that okay? The rent paid is 14,000 rupees. Clear. Now, come on. Rent paid 14,000. What is the rental expenses going to be debited in the P&L account? How much you are going to debit to the P&L account? If the rent being 1,000 means for the 12 months, you have to consider only 12,000 being the expenses. But if you have paid 14,000 means, what does it mean? You have paid 2,000 rupees in advance. So the rent paid in advance should be subtracted from the rental expenses because the entire 14,000 is not the expenses. Only 12,000 rupees is the expenses. The 2,000 rupees paid in advance meant for the next period. Still we have the time to enjoy the benefit in the future. Whatever the payment you made as on the year end, having any benefit to be enjoyable in the future will always be named as an asset. So now that one is going to be subtracted minus rent in advance. Rent in advance closing is subtracted. So the rental expenses to be debited to the P&L account is 12,000 rupees. This is rental expenses debited to the P&L account. This should always be nominal account. This should always be nominal account. Is that okay? And the rent paid in 2021 and 2022, the rent paid being not 14,000, this is 13,000. What does it mean? How much rent you have to pay for 2021-22? Again 12,000 rupees, but already there is an advance. Okay, so you have to subtract that 2,000 rupees. 10,000 only is required to be paid in 21-22. But you paid 13,000. What does it mean? 3,000 is meant for the next year, means 22-23 years one. So the rent paid in 2021 is this one. So 21-22, rent paid being 13,000 rupees. The rent in advance of the previous year becomes the opening, should be subtracted. So you need to pay only 12,000 rupees. As per this one, you have to pay only 10,000 rupees, but you paid 11,000. You paid 11,000 rupees. Okay, sorry, 15,000 rupees. Add rent in advance, opening. So when it comes for the 21-22, you paid 13,000 rupees. You are pretty sure that you just interact with the owner. Sir, last year itself I paid 2,000 rupees in advance, right? So I paid 2,000 rupees in advance. The balance should be only 10,000 now, but you asked so much. So 13,000 rupees is the amount paid in the current year. Previous year itself also another 2,000 paid. So 15,000 rupees I paid. Like how much I paid for this current year? 15,000 rupees. But we are sure that we have to pay only 12,000 rupees. This is the nominal account. Then what about the difference between these two? The difference between these two, 3,000 is nothing but rent in advance for the closing. Rent in advance for the closing. So 13,000 rent paid. What is this? What is this? Nominal account. We say that. But really it's not nominal account, because to the extent of rent paid remains unenjoyed, unused, unexpaid, the year end will be named as an asset. So here we came to know 3,000 rupees rent still, though we paid unenjoyed or unexpaid, will be an asset. This will always be real account. You should not again ask me questions. Sir, house are rent account? It's not real account, it's a personal account. Okay, it's a personal account. Asset account. Representative personal account. This is called representative personal account. Rent in advance means it represents the landlord to whom we have paid in advance. So it's called representative personal account. You cannot say that rent paid is always an expenses. Rent paid is always not an expense. Sometimes rent paid may be an asset. How? Exactly by the year end, the 31st March, the tenant says, sir, don't disturb me to get the rent month after month. I will settle the entire year's rent today itself. If the tenant says that I am willing to pay the entire 12 months rent today itself, can I do so? I can do so. Exactly on 31st March 2022, what I do is, sir, for the year 22-23, the 12 months rent, say 12,000 rupees, I will pay today itself in single shot. While closing the balance sheet, 12,000 rupees we paid for rent, still unexpaid, will be called as an asset, put in the asset side as rent in advance, which is a representative personal account. This can be equated with this one, this purchases. Purchases, the amount paid for purchases is 5,000, similar to the rent paid is how much here? for the year 21-22. So we have paid 13,000. Opening advance is similar to the opening stock. How much is that? 2,000 rupees. That should be addable. 15,000 rupees. Closing stock is similar to what? Rent in advance closing, which is 3,000. The ultimate item being 12,000. This is the expenses. This is always nominal account because this payment is already enjoyed. So this is no more real account. You now equate this one and this one. This purchases as well as rent, you can equate these two. If you are able to equate these two, you are able to understand in much better way. So the purchase is nothing but a payment like rent. Payment like rent. With that, we add the opening stock similar to the opening advances. Subtract the closing stock, which is similar to the advances of advance payment, rent paid in advance closing. Ditto. Then from this, it is very clear. The opening balances and closing balances always be personal account, that to representative personal account. To the extent the payment we enjoyed, expaid will be the expenses nominal account. To the extent of payment cannot be said purely nominal account because it consists of some nominal account, some real account component also. It's a blend of those two. So that's why it is sometimes named as nominal account, sometimes named as either real account or personal account. That's your choice. The same way, the purchases in absolute sense will be either real or nominal. After the adjustment of opening and closing stock, whatever the leftover will be called as cost of sales or adjusted purchases. That adjusted purchases should always be nominal or expenses only. Nominal or nominal account only. It cannot be asset anymore. It cannot be asset or nominal account anymore. Is that okay? Hope so you could understand. Now, how do I pass the journal entry for this? Let's see here. All these things are easy to remember now. So, purchases is real account and cost of sales are adjusted purchases either nominal or see, this is always nominal account. Purchases is either real account or nominal account, but adjusted purchases, which is nothing but after the adjustment of opening stock and closing stock, named as cost of sales or adjusted purchase, that should always be nominal account transferable to the trading account. Now, only this amount is transferable to the trading account. Now, how do I arrive this? Let's see here. I am going to pass the entry for opening stock. Another one is I am going to pass the entry for closing stock. And these two entries are going to be routed through purchases account. See the journal entry for opening stock. This opening stock is going to be adjusted in the purchases account. Means it's an expenses debit now. So I am going to remove the opening stock. Usually opening stock is the debit balance. To remove that should be credited. Okay, where it is going to be debited? It's going to be debited to the purchases account. It's a part of adjustments of purchases value. Okay, so this is going to be addable with the opening purchase, means purchases. To add with the purchases by default debit balance. By adding with that, again you have to debit the purchases. By doing so, the opening stock will disappear. After that, the entry being 1,000. For the closing stock, the journal entry being, closing stock is an asset. So you debit the closing stock account to what? It is going to be adjusted from the purchases. I am going to subtract the purchases. Purchases is a debit balance. To subtract the purchases, I am going to credit it. So two purchases. By doing so, the closing stock value being 3,000 is posted here. Remember, how do I incorporate in the trial balance here? By incorporating these two in the trial balance, I am going to prepare a new adjusted trial balance. See, purchases debit and another credit. 1,000 rupees debit means it is added with the purchases. 3,000 credit means it should be subtracted from the purchases. So 5,000 is the existing value in the purchases. With that, purchases debit 1,000 is added and the purchases credit 3,000 should be subtracted. If I do this adjustment, now the adjusted purchases being 3,000, this adjusted purchases should always be what type of account? nominal account. Nominal account. Then opening stock 1000 we have, and opening stock debit side 1000, here credit side 1000. If you do adding of these two, what will be the answer in opening stock? 1000 rupees debit and 1000 rupees credit. If you add, what happens? Opening stock will disappear. Right, opening stock will disappear. And then closing stock, a new debit balance comes. Where will it come? Will come in the debit side of the trial balance. See, if you open the closing stock account, it will be having a debit balance of 3000. While preparing the trial balance, where will it go? The debit balance of the closing stock will go to the debit side of the trial account, trial balance account. So here, I am going to post here as closing stock. Rather than opening stock, it becomes closing stock 3000 rupees. Now, tally the trial balance. You will get the trial balance tally. So most of the times the closing stock will appear where? Below the balance, trial balance. If the trial balance consists of the closing balance, closing stock, what does it mean? The stock is already adjusted. Stock is already adjusted. Otherwise, the trial balance, what is given here is adjusted trial balance. So in the adjusted trial balance, no, the opening stock and closing stocks are already adjusted through the purchases account. So we don't have any more balances in the opening stock as well as the closing stock. So we have now recorded all. Let's see now. I'm going to again pass a transfer entry and then prepare the ledger. While passing the transfer entry, come on, purchases, where will it go? This will be trading expenses, carriage in, trading expenses, administration, P&L account expenses, selling, P&L account expenses, fixed assets, asset, investment assets, debtors assets, cash assets, closing stock, asset only. Closing stock given in the debit balance of the debit side of the trial balance is always asset. Always asset, right? So hope so this will be an asset item. And sales, trading income, capital, loan, liability, creditors liability. Now we can pass the entry. Okay. So far, transferring the trading expenses to the trading account. Okay, trading account. What is the entry? Expenses are going to be credited and trading account is going to be debited. So the entry here being trading account debit. Trading account debit. 2. What are the items are here? 2 purchases. 2 carriage in. 2 carriage in. How much is that? 1000. This is also 3000 and carriage in is 1000. Only 2 items are available, right? So I have posted these 2 items. This one is over. This one is also over. The total value being 4000 rupees. And this one, the trading income, I'll post this. Trading income is transferable to trading account. Trading account. What is the entry? Now the trading account is going to be credited. Sales account is a credit balance that should be debited. So sales account debited to trading account. To trading account. The value being 7,000. Now, these two is going to be recorded. Okay, are going to be recorded. Administration expenses and selling and distribution expenses. Okay. This is nothing but profit and loss expenses are expenses related to the profit and loss account transferable to the profit and loss account. Where these two are the expenses, debit balances can be cancelled by crediting, and it is transferred to the P&L account. So I am going to debit the P&L account. So P&L account debit to what? Admin expenses 1000 rupees, to selling expenses 1000 rupees, and debit to P&L account 2000 rupees. Is that okay? Now we can prepare the trading and P&L account and then balance sheet. Okay. Trading and P&L account and then balance sheet. So, trading and P&L account and then balance sheet. What are the leftover items in the trial balance? 1, 2, 3, 4, 5 assets are there. I just post all these things in the asset side. Okay. Fixed assets 4,000 rupees and investments 2,000 rupees. Debtors 1,000 rupees. Cash 1,000 rupees. Stock in trade 3,000 rupees. And in the liability side we have 3 items. Loan creditors. So loan value being 4,000. Creditors being 1,000 rupees. Capital being 5,000 rupees. 5,000 rupees. Is that okay? Now I have transferred this purchases from trial balance and posted here. Sales also transferred from the trial balance. Admin, selling and distribution expenses transferred from trial balance. So it is closed today. It is closed today. Now what are the leftover accounts to be posted here? Trading account. How do I post this now? In trading account, I have to post 2 purchases and 2 carriage inward. So 2 purchases, the value being 3,000. 2 carriage in, the value being 1,000. And then this one, trading account in the credit side. The opposite item, buy sales will be posted here. Buy sales, the value being 7,000. And then here in P&L account, 2 admin expenses. The value being admin expenses 1,000 rupees and 2 selling expenses 1,000 rupees. Hope so we have posted everything. Now close the trading account. If I close the trading account, I will get a balance of rupees 3,000. This 3,000 should be transferable to a P&L account. Further, the entry being transfer entry. From the trading account, it will be transferred to the P&L account. Okay, trading account to P&L account. The entry being debit the trading account. Okay, trading account debit to P&L account. To P&L account. This value being 3,000. By passing this entry, it is understood that this GP is transferred to the P&L account. So this is GP and I transfer that to P&L account here, 3,000 rupees. Now by tallying the P&L account, I get a balance of 1,000 rupees. This is for whom? Capital account. Okay, profit and loss, net profit simply. For transferring P&L account balance to the capital account, the journal entry being what? Come on. P&L account should be debited, right? So P&L account debit to capital account. To capital account. This value being 1,000 rupees. By doing this, the capital account is going to be inflated or increased by 1,000 rupees. Now the capital account balance being 6,000. Close up tallying the balance sheet, it's 11,000. 11,000. So from this illustration, I have clarified whether the purchases is real account or nominal account. In general, you can either assume this being real account or nominal account. just similar to a normal rental expenses paid. Like you can equate that. Either you can consider this being real or nominal. But actually, the trading account consisted of only the expenses nominal account. The entire purchases cannot be recorded in the debit side of the trading account only after the adjustments of unsold stocks available in the beginning and end, which is nothing but opening stock and closing stock, adjusting the purchases. That will be called as a nominal account, named otherwise as adjusted purchases. That value will be always nominal account. You cannot classify this either real or nominal. This is always nominal account. So I have clarified this one. Now, the next point is, will the trial balance consist the closing stock? Naturally, the trial balance consisted of closing stock also when the adjustment entry for the opening stock and closing stock routed through the opening stock, so means purchases account. How the opening stock and closing stock adjusted in the purchases? How the opening stock is now transferred to the purchases by adding with the purchases. The closing stock is transferred to the again purchases account by subtracting, the entry being purchases to opening stock and closing stock to the purchases. By doing that, after this, if you prepare the trial balance, after passing the entries for the opening stock and closing stock, the trial balance will have closing stock in their book, not opening stock. Opening stock will disappear. In that case, when the closing stock appears in the trial balance, that closing stock should directly go to the balance sheet, not in the trial balance. You should not transfer this to trading account. If you are transferring that to the trading account, it's wrong. It will go to the balance sheet's asset side only. Is that clear? So 2 points are noted here. One is purchases, whether it's a real or nominal, I explained. Second one is, if the closing stock appears in the trial balance, how do I handle that? If the closing stock appears in the trial balance, that should be transferable only to the balance sheet, not in the trading account. Is that okay? Come on, make a note of it.